Okay, so welcome to today's meeting of our AFM course. In the last meetings, we have discussed instead whenever we started currency risk, that currency risk is the risk that currency rates may go up if you have to make payment or go down if you have to receive payment, the types, translation, transaction, economic risk, the codes, direct code, indirect code, and the techniques deal in home currency, leading, lagging, matching, forward exchange contract, money market hedging. Now, in previous two classes, we have heavily practiced forward exchange contract and money market hedging. Now, forward exchange contract and money market hedging once done, then we move towards the question in which we used to decide which is better, forward exchange contract or money market hedging. We used to solve both forward exchange, relevant row, highlight, quote, and then multiply or divide. Payment is buying, receiving is selling. Money market hedging, payments go to foreign bank and deposit less amount to buy that from the money changer and more of the amount from local bank. Whereas in case of receipts, go to foreign bank and borrow, sell it to money changer and deposit. Okay. Now we're going to start our new technique today, and this technique is called netting or matching, and we will be doing 2 to 3 questions of that as well. Now, what is netting or matching? I've already taught you theoretically that what is netting or matching. We just need to understand how the questions work. Now, the definition of netting or matching was that it involves offset of receipts and payments. Whenever you have to make payment and you have to receive payment, no need to go into separate transactions, better to offset them. This is called netting or matching. Now, there are two types of netting. The first is called bilateral netting. In bilateral netting, there are only two group companies involved. Only two companies are offsetting their transaction. Whereas the next one is multilateral netting. Multilateral netting is where several group companies are involved. There are several companies which are offsetting transactions. Okay. Bilateral netting, only two group companies are involved. Multilateral netting, several companies are involved. Okay. So this is how it works, that in bilateral netting, only two group companies are offsetting their transactions, whereas in multilateral netting, there are several group companies involved. Now, the important thing you need to know is how to solve a netting question if you get in the exam. Solving a netting question is very easy. It's just a two-step approach. Step one, convert all intercompany balances into one currency, that is the parent currency. All intercompany balances are firstly converted into one single currency. All balances. How are balances converted into one currency? Conversion is always via multiplication or via division. There is no other option. All balances are converted into one currency. It will tell you, and if it doesn't state in which currency you should convert, always the parent. And the second step is to make a transaction matrix as follows. The format of transaction matrix is like this. You make columns of owed by is payable, and you make rows of owed to, receivables. Owed by is payable, owed to is receivable. Make columns and rows. Enter the relevant subsidiaries or companies. Record their individual transactions. And that's it. This is how netting is solved. First, convert all intercompany balances into one single currency, that is the parent currency. And then make a transaction matrix. The transaction matrix is made as follows: owed by, payable columns, owed to, receivable rows, record transactions of all companies, and that's it. Okay, I will discuss the advantages, disadvantages later, but firstly I need to teach you how does a netting question get solved in the exam and what is the meaning of this transaction matrix. Okay, so let's start through this question. I've shared with you a notes folder of risk management. I've shared with you a notes folder of risk management. You need to go to page number 7 of that folder. There is a handwritten example. You need to go to page number 7 of that risk management folder. There is a handwritten example. You need to deal that handwritten example. Okay, I'm starting it. A group of trading companies controlled from USA. A group of trading companies controlled from USA has subsidiaries in UK, South Africa, and France. So there is a group of trading companies which are controlled from USA. The holding is in USA, has subsidiaries in UK, South Africa, and France. As of 31st December, the intercompany balances were. So as of 31st December, what are the intercompany balances? Kindly note, as of 31st December, what are the intercompany balances? Receivable, which is owed to, and payable, which is owed by. So receivable is UK, payable is South Africa. The balance is 1200,000, the currency is South African rand. Receivable is UK, payable is France. The balance is 480,000 and the currency is euro. Okay. The next transaction, it's receivable is France, payable is South Africa, currency is rands, 800,000 South African rands. The receivable is then for transactions South Africa, payable is UK, balance is 740,000 GBP, Great British pounds, and receivable is South Africa, payable is France, the balance is 375,000 euros. Either you say owed by owed to or receivable payable is the same thing. Exchange rates are South African rands per dollar 6.126, pound per dollar 0.680, euro per dollar 5.88. Requirement: calculate net payment between subsidiaries after netting of intercompany balances. You need to find net payment after netting off. So you need to apply netting off technique. Okay. So how does netting off technique apply? Let's start. How does netting off technique apply? The first step: convert all balances into one single currency. Convert all balances into one single currency. This is the step one. Convert all balances into one currency. Okay. What are the balances? The first balance is 1200,000 South African rand. The second balance is 480,000 euro. The third balance is 800,000 South African rand. The fourth balance is GBP 740,000. Okay. And the fifth balance is 375,000 euros. Okay. You're asked to find the net payment between subsidiaries after netting of intercompany balances. You need to apply netting. So netting involves two steps. I am at the first step: convert all intercompany balances into one single currency. So there are five balances: 1200,000 South African rands, 480,000 euros, 800,000 South African rands, fourth one 740,000 GBP, and the fifth one 375,000 euros. I have to convert all intercompany balances into one single currency. And which currency? If the question doesn't tell, always the parent. Where is the parent's currency? So convert all intercompany balances into one currency, that is dollar. Convert all intercompany balances into one currency. If the question mentions fine, else parent. Let's convert 1200,000 South African rands into dollars. It's either through multiplication or division. See, you need to convert 1200,000 South African rands into dollars. What is the exchange rates? It's 6.126 South African rand per dollar. The parent, the controlling is in USA. The currency is local, US dollar. It's in denominator indirect quote. So you will convert to divide. Okay. Dollars, 195.86. Second, 480,000 euros. I have to convert all balances into one currency, dollar. This euros need to be converted into dollars. So either multiplication or division. No other option. Let's convert 480,000 euros into dollars. Multiply or divide. The rate is euro per dollar. Again, dollars in denominator. Indirect quote, you need to divide. You will get the dollars. Okay, I will work that out later. Again, 800,000 South African rands, the third balance need to be converted into dollars. Again, multiplication division. There is no other option of conversion. Again, the rates are South African rands per dollar, dollars in denominator, indirect quote, divide. You will get dollars. Okay. Then GBP 740,000 needs to be converted into dollars. Multiply, divide. Divide because the rates are 0.660 GBP per dollar. Dollars in denominator, indirect quote, divide. 0.660, get dollars. And finally, euro 375,000. Again, it's euro per dollar, divided, indirect quote, 5.88, get dollars. Now, it is a possibility in exam question that some currencies are given in indirect quote and some are indirect quote. Like in this question, every currency was per dollar, per dollar, per dollar. In everywhere, dollar was in denominator, the parent was in denominator, the indirect quote, division, lower, buying, higher, selling if two rates are given. But it can happen that South African rand per dollar in dollars in denominator, and the next currency is dollar per pound. Dollar is in numerator. So to convert pounds to dollars, you needed to multiply. Okay. So look at the question carefully, what the question is asking here. The first step of netting is that convert all intercompany balances into one single currency. And what is that one single currency? The one single currency is dollar, unless mentioned something else, always the parent. Every transaction needed to be converted into dollars. Multiply or divide? Divide. Because it's per dollar, indirect quote, divide. I converted everything by dividing. So my answers are 480,000 euros divided by 5.88. It's 81632. Okay. Then 800,000 South African rands divided by 6.126. It's $130,590. Okay. 740,000 divided by 0.680. It's 1088,235. 63. That's the first step. Convert all intercompany balances into one currency. So this is the first step, that you converted all intercompany balances into one currency, and one currency was always parent unless mentioned. I don't think this step is a problem. You just have to convert all balances into one currency, either through multiplication or division, depending on code. Second step. Make a transaction matrix. Step 2. Now listen carefully, how do you make a transaction matrix? How do you make a transaction matrix? Okay. In transaction matrix, you will make a column called owed by. That is payable. Okay. And you will make rows. of owed to which is your receivable. You will make columns of owed by, which is your payable, and owed to, which is your receivable. Mention all transactions with companies. Mention all transactions with companies. Look at the first transaction. Payable was South Africa, receivable was UK. So there was UK, South Africa. Mention all companies, all groups, all countries which were making transactions. Okay. So the first transaction, UK and South Africa were involved. So I wrote UK and South Africa. The second transaction, UK and France were involved. I've already written UK. So I need to write France. In the third transaction, France and South Africa were involved. I've already written France and South Africa. In the fourth transaction, South Africa and UK were involved. I've already written South Africa and UK. And in the fifth transaction, South Africa and France were involved. I've already written South Africa and France. So remember to mention all countries. The first transaction, UK and South Africa are involved. I wrote UK and South Africa. Second, UK and France. I wrote UK, already written, and France. The third, France and South Africa, already both are written. Fourth, South Africa and UK, both are written. And the fifth, South Africa and France, both are written. And the same countries of which you have made columns, make the rows. UK. Okay, this is how transaction matrix is made. Owed by, columns, owed to receivables. Mention all countries in columns and the same in rows. Okay. Fill these boxes. Obviously, there is no transaction of receivable and payable between UK and UK. It can be. Payable is UK, receivable is UK. It can be. No receivable payable between South Africa, South Africa. No receivable payable between France, France. No receivable payable between UK, UK. Nothing between South Africa, South Africa. Nothing between France, France. Fill others. What is the first transaction? The receivable is UK. See, receivable is UK. And the payable is South Africa. Okay, receivable is UK and payable is South Africa. So note this transaction at the intersection of South Africa and UK. Receivable is UK and payable is South Africa. How much is this transaction? 195,886. The first one already converted. 195,886 right here. Okay, 195,886. Move towards the second transaction. Receivable is UK, payable is France. So receivable is UK, select UK, and payable is France. UK and France intersection. The transaction in dollars is 81,632. The third transaction. Receivable is France, payable is South Africa. So receivable France here, payable South Africa here. At the intersection of South Africa and France, what is the amount? 130,590. Okay. Fourth transaction, receivable South Africa, payable UK. Receivable select South Africa, payable select UK. What is the transaction? $1,088,235, because every transaction is now converted in dollars. And the last transaction, receivable South Africa, payable France. Receivable is South Africa here, payable is France here. What is the amount? 63775. Okay, whatever columns and rows are left empty, leave them. We can't do anything if there are no transactions. So first, you converted all balances into one currency. And second, you need to make a transaction matrix owed by, owed to. Mention all countries. Mention the transactions at the correct intersection. That's it. Now last step. Total all of these. UK, South Africa, France. Total all of these. So the total of UK is 1,088,235. Total of South Africa is 195,886 plus 130,590. It's 326,476. And total the French transactions. It's 81,632 plus 63775. Okay. This is the total of payable or owed by, right? You added all payable balances, right? So this is the total of owed by or payable. Now total like this as well. Like this, UK all total like this, South Africa all total like this, France all total. So like this, the France all total is 130590. Okay. Like this arrow, the total of South Africa is 1088235 plus 63775 1152010. And like this, the total of UK is 195886 plus 81630 277518. Okay. This is the total of all receivable, or you can call it, this is the total of owed to. It's the same thing. Okay. Last step which you have to do is, you have got the total of payable, you have got the total of receivable. Deduct the total of receivable or owed to from the total of payable. So total payable of UK was 1088,235. Total receivable was 277,518. Deduct this. Okay. Total of payable South Africa was 326476, and the total of South Africa receivable was 1152010. And finally, the total of French payable was 1145407, and the total payable less total receivable, as you can see above, 130590. You get net receivable or payable. So 1088235 minus 277,518. It's 810,717. Since payable are higher than receivable, it's net payable. Okay. Secondly, 326476 is the South African payable, but 1152010 is the South African receivable, and that is negative 825,534. Since receivables were more than payables, it's net receivable. That's why coming negative. And the finally 145,407 was the payable minus 130,590 was the receivable. So net is 14817. Since payables were more than receivables, it's net payable. Okay, that's the end of transaction metrics. Just to confirm whether your answer is correct or not, I need you to net them all off. The net off of all this should be 0. See, 14817 plus 810717 less 825534, net is 0. That is net off. This means, what does this mean? Listen carefully. UK has net payable, South Africa has net receivable, and France has net payable. No need to do 5 or 6 transactions. France has net payable, it should pay. UK has net payable, it should pay. So UK has net payable, it should pay to this. France has net payable, it should pay to this. And instead of 5 transactions, you will only deal in 2 transactions. France will pay, UK will pay, and South Africa will receive what is receivable, and that's the transaction. Okay, So this is how netting works. Hope you understood it. So just need to copy this, that convert all intercompany balances into one currency, step one, and then make a transaction matrix. Okay, please copy this so that I can give you another question. Okay, now you have to do one question yourself. And this question is again in the same folder where they send you. Let me just confirm you the page number. This risk management folder. This question is on page number 5. Okay, you have to do this question yourself. I'm just explaining a small thing in it. Please carefully listen. It's a worked example. P is the parent company of a group that contains 3 subsidiaries. Q based in Europe, R based in USA, and S based in Canada. So P is the parent company, 3 subsidiaries, Q in Europe, R in USA, and S in Canada. Following cash flows are due in 2 months' time. Owed by owed to Canadian dollar 3 million, owed by owed to Canadian dollar 5 million, owed by owed to, that's receivable, payable, same thing, Canadian dollar 7 million, then 2 million, then US dollar 6 million, then Euro 12 million, then Canadian dollar 5 million. Mid-rate exchange rates in 2 months are expected to be. Now the rates are presented as follows. Pound 1 is equals to US dollar 1.6. Okay, remember 1 always means denominator. Pound 1 is equals to 1.6 US dollars. 1 is always in denominator, so it should be read as US dollar 1.6 per pound. Okay, the second rate is pound 1 is equals to euro 1.2. 1 always comes in denominator, so it should be read as euro 1.2 per pound. Okay, and the last pound 1 is equals to Canadian dollar 1.5. 1 always comes in denominator, should be read as Canadian dollar 1.5 per pound, so that you are easily able to identify the codes. Okay, remember 1 always comes in denominator. Okay, so I have told you this thing which I wanted to tell you, and I want you to do this question yourself. Calculate using a tabular format, transaction metrics, the impact of undertaking netting. Okay, do it yourself. We have 10 minutes. Okay, let's do solution of this question now. We're asked to solve netting. So first convert all intercompany balances into one currency, and one currency is of P, the parent currency. And it looks like the parent is not Europe, parent is not USA, parent is not Canada, it's pounds. So Canadian dollar, 3 million, then US dollar, 5 million, US dollar, 4 million, Canadian dollar, 7 million, Canadian dollar, 2 million, US dollar, 6 million, Euro, 12 million, and finally Canadian dollar, 5 million. All these will be converted into one currency, pound. Since pound is one denominator, everything is per pound. There is no guarantee everything will be per pound, but in this question, again, everything is per pound, denominator, indirect code, divide. So Canadian dollar will be converted everywhere by dividing it with 1.5. US dollar will be converted everywhere by dividing it 1.6. And euro will be converted by dividing it 1.2. Okay, let's start. £2 million, 3.125 million pound, 2.5 million pound, 4.66 million pound, 1.33 million pound, 3.75 billion pound, 10 million pound, 3.33 million pound. So all transactions were converted into one currency, pound, that is of parent. Make a transaction matrix now. Okay, so find the transaction between companies. The first one is between P and S, so you need to write P and S. Then PR, so P is already written, R. Then QR, QR is all Q is to be mentioned and R is written. QS already mentioned, RS already mentioned, and RP already mentioned, SQ already mentioned, SP already mentioned. Okay, the same fourth thing should come here: P, S, R, and Q. No transaction between P to P, between S to S, between R to R, between Q to Q. They won't trade with each other. P to P. I can't pay and receive myself. I can't pay to myself and receive to myself. No transaction between P and P, S and S, R and Q and Q. Now know the transaction. First transaction owed by is P and owed to is S. Owed by P, owed to S. 2 million pounds. Okay. Second, owed by P, owed to R. Owed by P, owed to R. How much? 3.125 million. Third transaction, owed by Q, owed to R. Q to R. 2.5 million. Fourth transaction, owed by Q, owed to S. Q, S. 4.66 million. Okay. Fifth transaction, owed by R, owed to S. 1.33 million. Sixth transaction, order by R or 2P, 3.75 million. Second last, order by S or 2Q, S and Q, 10 million. And the last, order by S or 2P, 3.33 million. Okay. You need to do total horizontally and vertically. That would be it. So total of 3.33 plus 3.75. Total like this, 7.08 million, 8 million, 5.625 million, 10 million. This is the total of all receivables. Okay. Total in this manner also. 2 and 3.125, it's 5.125 million. S is 13.33 million. Then it's 5.08 million, and then it's 4.66 plus 2.5, 7.16 million. Okay. The last step is to deduct P total from P, S total from S, R total from R, and this from S. You will get net receivable or payable. So it's 2.84 million negative, 0.545 million negative, 5.33 million positive, 1.955 negative. First net them off, whether it is becoming zero or not. So 1.955 negative minus 0.545 negative and 2.84 negative. Net them off, it's just a 0.01 difference, which is immaterial, should be ignored. Okay. So what does this finally mean? This finally means that the more payables, less payables, more receivables. It has to receive, it has to receive, it has to receive, and it has to pay. So it should pay to all of them. And in 3 transactions, the whole stuff will be over rather than 8 transactions. There were 8 transactions, it will be settled in 3 transactions. Okay. So now one last question for today's class. That's on page number 8. It's the question named multi-drop. I want you to read it yourself and do it yourself. You have 10 minutes. Okay, please start.
number 6. Okay.
Okay, so I have just here shown in front of you the answer of this multi-drop question. Okay, you can have a look at this answer and check whether you have done it correctly or not. Okay, actually, since the class has already been too long, so I don't want to make it further long because this question discussion is going to take 20 minutes at least because we have part B theory as well. So just I'm requesting you all that have a look at this solution and check if you have done correctly, it's fine. If you have not done correctly, you can rectify. And don't worry, in the next meeting, I will firstly solve this question and then move towards the next questions. Okay. Have a nice day. Take care. See you in the next meeting.